Hello, everyone here. Buen dia to all. Chris Capre, founder of Second Skies. How's everybody doing? I know FX Street is just having a few challenges with the site, nothing major. More people will be joining, probably knocking at the door, hopefully. So, hello, everyone here. Just want to say hi before we begin and let you know we're going to be recording today's webinar. So that means we all have to be on our best behavior, including myself, which can be challenging at times. What it also means is that if we can keep our questions focused to the material, the class, the subject, and everything like that, that would be great. At the same time, along those lines, I want to encourage questions. I want to welcome them. I want to have an open door policy with questions, and I want you all to feel comfortable that you can ask those questions. I want you to ask those questions, especially since there's still more people coming in. Because of the technical difficulties, we want to, make sure this is an interactive class. Interaction, activity always increases the learning process. It's always been the case. And at the same time, if you have questions, that's why I'm here. This class is for you. I definitely get a benefit out of it. Especially since you guys ask great questions, and sometimes those questions provoke me into different ways of approaching the market. But at the same time, this class is really for you. And so with that being the case, that's why I'm here. And so with all that being said, welcome to everyone. It looks like everybody that's in here is people that I know. There might be somebody new in here. If there is, feel free to send me a message down below in the chat section there, letting me know that this is that you are new here. I like to be able to tailor my class to you. For those who don't know, this is the weather report. This is a class solely dedicated on Ichimoku Cloud trading. A really interesting class for you. We're going to be looking at some good 4 hours, some daily, weekly charts on a lot of different pairs, showing you just the combination of the Ichimoku Cloud with other indicators, how we can use it as an additional confirmation without even needing any lower screen indicators, how we can use it to determine good reversal points, good entry points, and so forth. So I'm super excited to be talking about this, and I don't know why, but my price, oh, there we go, price finally moved. Must be a slow moment here in the market. So, okay, entonces. So with that being said, thank you all for coming. And again, this class is being recorded, so we're going to begin now. So I want you all to take a look at the pound-yen dollar. The pound-yen dollar had a very interesting last few days. We had this nice little climb, or pound-yen, sorry. We're going to start with the pound-yen here. And the pound-yen had a decent climb. It's been struggling as of late. It hasn't really been making any impressive gains. Volatility has been down on the pound-yen. It did make a pretty decent run from the low 109s up to 153. Although generally that doesn't seem impressive because it can move that much in a day. Right now, because of the decreased average true range in the pair, this move is pretty significant. It was pretty consistent and impulsive. And then we had this kind of double topping pattern right around the 153 area. The pair then began a very interesting and aggressive sell-off. Very strong, very impulsive. Starting on the 10th of September, and from that only producing one 4-hour blue candle, which means that the sellers were very aggressive and relentless in their attack to the downside. In fact, so much so that the bulls couldn't even muster anything. And if the bulls did try and get in, it failed miserably. The pair then pretty much went to the 150 barrier, stopped, closed just above it on a dime on two separate occasions, and then decided to launch another attack. Now, mind you, what is interesting is that this move, although it was impulsive, was definitely not as impulsive as this move. We do have two large candles here, but the bottom line is this thing still, until it would break above a 61.8% retracement, was still in a down move. It also had yet to really close above the 20 MA, and when it attacked this 20 MA, this was kind of a make or break moment for the pound yen. In that process, it closed right at the 20 MA. The next candle created a very nice 4-hour pin bar, which is a very good reversal signal. And from there, again, failed to close above the 20 MA. Now, Fibonacci alone is never a reason to get in a trade. In and of itself, even expert Fibonacci traders will say, hey, Fibonacci's alone are never a reason to get in and of itself. It has to be confirmed with some other indicators, some other analysis, some other reason to get in. And the 20 EMA definitely gave that, but it wasn't matching up with the fib levels. However, this pair clearly was respecting this 50% fib level. So one interesting thing is lately, because of the reduced volatility in the markets, the lower time frames on the Ichimoku haven't been that useful, because there just hasn't been enough movement to pull the clouds in one direction or another. So with that being said, we have to go to upper time frames. Anytime you have smaller movements, it doesn't matter what your indicator or method is, you generally increase the time frame on that to get to filter out a lot more of the noise and to really get into the bigger picture. This is typically what happens with institutional traders in the summertime. Movements get smaller in the summer, so they go to higher time frames, they hold positions a little bit longer, and they play wider ranges. So with that being said, I've been mostly consumed with 4-hour daily and weekly charts on the Ichimoku. If we start to get some very hard trends, then I'll start pulling the Ichimoku out on the 30-minute, 1-hour time frames. But we're just not there yet. So with that being the case, the 4-hour has been sort of my weapon of choice, 4-hour and daily as of late. With that being said, in looking at this retracement, the 20 EMA was pretty convincing. I was stopping here and we had this good Fibonacci ratio holding here. But take a look at this. If I needed an additional confirmation, how about that? Let me get rid of this Chiku span here. Oh, and I don't need that fib line there. Okay, that's gone. So this same move now comes up to the 20 EMA, comes up to the fib, and fails to close above a flat Kumo bottom. To me, that was kind of the final nail in the coffin to determine whether this was a good sell signal or not. And so, you know, if you were ever looking for an additional analysis or an additional reason, pull up the Kumo on a 4-hour or daily chart or something like that. You know, this is no lower screen indicators whatsoever. This is just all upper screen. And if you need additional confirmation, there are many times that the Kumo top or bottom, actually this is a flat Kumo bottom, but the Kumo top or bottom can be an attractive piece of the puzzle to use to confirm or deny a rejection point. Sometimes bounces off the Senku span A or span A can be very useful. Other cases, a flat top or bottom. In this case, we had a flat bottom. We've been mostly bearish on the pound yen for a while. I've been only giving bearish recommendations on it based upon the daily chart, which means that we look for selling rallies. And this Ichimoku Cloud really offered us, I mean, you think about it, none of the closes and these stops were at a fib level. We have rejections at a fib level, but none of this close, this open, and this close, none of them happened at a fib level. Where did they happen at? A 20 EMA and a Kumo bottom here. So this was kind of a very interesting theme that I was actually seeing when I was looking at naked price action charts, and then pulling up the Ichimoku Cloud as a confirmation or additional analysis to get in to certain pairs. Okay, so with that being said, that was kind of the sneak peek of one of them for today. Now I want to take a look at a couple more examples. I'm going to pretty much pick on the pound most of the day, and I have been actually for the last few weeks because its weakness has been apparent, just as Aussie strength, Aussie dollar strength, Kiwi dollar strength, Euro dollar strength has been apparent. I like to, take positions and trades on pairs that have very clear delineations of what they're doing. Strong uptrend, strong downtrend. Great, a lot of weakness or a lot of strength. Anything in between is not as attractive because it's not clear. We're putting our money on the line. We might as well do something with the most amount of clarity. And for the last 3 or 4 weeks, I've been kind of picking and bashing the pound dollar, suggesting that we pretty much want to be selling rallies as much as possible. So looking at the 4-hour chart on the pound US dollar. To me, what is most interesting about this, let me zoom back just a little bit. We had a nice little run in this pair from the 61 to the 67. Now, I just want to mark this level for a second here. Look at how many 4-hour opens and closes we had at the exact same level here. A lot. 1, 2, 3, 4, 5, 20 hours of price trying to break this 6100 handle. And it never even actually touched 61 even. It just kept open and closing around 6122. So was it necessarily the round number? Possibly, but I think there was actually something else in play that actually had an effect on it. We're going to get into that in just a second. If it really was a round number, it should have gotten a lot closer to it, but it just didn't do it. In fact, there's immense consistency upon the wicks and upon the opens and closes here. So we have this nice impressive run from the low 61s up to 67.50. Good 600 pip run, mostly impulsive the entire way. We started to form a head and shoulders pattern, which is a reversal pattern suggesting possible fall. Very nice 4-hour candle. Eclipses the previous 10 or 20 candles. Very good bearish sign. And so far, fibs have been working really, really well on this. Went to a nice 61.8 at 66.50, which also happens to be a pivot level, the R1 level. So very handsome play, and it's pretty darn close to the S3 pivot, which happens to be the 150 extension. The 161.8 is at 63.88. But I like this. If you were short, this to me would probably be your better target right here. It seems the more clear one, it's the S3. Prices gravitate more towards pivots than they do fibs. On a day-to-day basis, prices gravitate a lot more towards pivots than they do fibs. There's just more contact with Fibonacci's than anything, or pivots than anything else. So with that being the case, we have this nice little play here. But what's also interesting to me is the 4-hour chart on this one as well. Taking a look at this here, we're now entering the cloud for the first time in a long time. We've also really developed some time and existence below the Kijun line, which it was having a very hard time doing during this impressive run. What's also most interesting are these two flat Kumo tops, or bottoms here. Particularly this last one, which, now keep an eye, remember the 6122 for a second here. The flat Kumo second bottom comes right at the 50% Fibonacci. So if this thing doesn't get really aggressive and sell off and close below this in the near future, then I expect it to kind of have a muddled approach, but a close below, a 4-hour close below this flat top from here to here over the next day and a half, to me, would suggest that this thing is going to unwind pretty heavily. It should attack the 61.8, and then a break below that, a 4-hour close below that, should suggest a full unwinding of the position. If it gets really aggressive and closes below this in the near term, then to me that would suggest that this thing is going to have a serious unwinding. Any 4-hour close below this suggests a move back down to the 61, 10, 20 region, in my opinion. But to me, this is just a continually bearish environment mode expression, not just in price action, but on the Ichimoku Cloud. So with that being said, the Ichimoku Cloud is giving us some very clear signals, some very clear guidelines, some very clear outlines for the pound US dollar as a whole, since the picture is relatively clear. Now, one last thing I want to do here is take a look on the weekly chart. Okay. First of all, on the weekly chart, we had this in fact, let me zoom out just a little bit more. Since we've had a close above the 20 EMA on the weekly chart, we haven't had a close below. We had one test of it, and it's launched since then. But there was a very good reversal sign inside this region from here to here, not including this current candle. Can anybody detect the first reversal sign, the first major reversal sign here in this chart here? Does anybody see that? And if you do, point it out to me. I'd love to see if anybody can pick it out. It was just, and it should be relatively easy, but what was the first reversal sign? I don't have many indicators up there, so it's going to be harder for you to rely upon that evening star pattern. Okay. Are you talking about this one right here? Is that what you're talking about, Forex Champion? Okay, good. That's actually not bad. I would consider that a very good sign. I would actually consider something else. And Rahul, you're saying a hammer. Where are you seeing the hammer? You're talking about this one right over here? Money Machine, what a great name. The rejection candle. Okay, so Money Machine. Rahul, you're talking about that hammer over here? Okay, that's not a bad one. That would be a sign of weakening, but since then the thing made new highs past that. Jack is saying the shooting star. Are you talking about this one here? Is that what you're talking about, Jack, number one? Okay. Actually, to me, I think Jack is the winner here. So, and Forex Champion was on it because he was covering the whole pattern. But this candle in and of itself communicated everything that we need to know. Let me explain why, but in this case, I would consider Jack the winner. So with that being said, round of applause to Jack. I would actually call this particular candle a pin bar. And this is something that I'm writing heavily about in my book. It's also something that I have a particular strategy in using for my online education class, which is going to be launched tomorrow. I finished all the videos save one, and I'm just finishing up with my graphic designer, but I actually have a strategy based upon this, identifying this, but this is actually a pin bar pattern right here. And so this candle right here was the kind of the nail in the coffin. I didn't even need the evening star to determine it. And actually, technically, this wouldn't be an evening star because the thing about an evening star is this ABC formation, the A candle, generally, if you were to look at the original version of Sakata's rules, Sakata was the rice trader who actually popularized candlestick formations. This A candle generally has to be the previous highest candle in the trend, and that's not the case. This candle eclipses it. So even though as a generic evening star pattern it qualifies, on the technicality it doesn't. So this generally has to be the highest point in the trend. But this candle in and of itself suggested massive reversal at this point. And especially with the rejection off of the 170 here. So this was the first sign of the reversal. What is interesting to note is that once I pull up the Ichimoku Cloud again and overlay it, take a look at how price responded to it. We already saw that rejected off the 20 EMA, but look what happened here. It took a long time to break above this Kumo, and when it did, it immediately gravitated towards the flat top. And I've talked about being cautious of trading Kumo breaks when flat tops are further ahead because price will gravitate towards that. Price did gravitate towards off this flat top and 20 EMA, and it bounced for 2 weeks, but now this candle is seriously threatening to erase this candle's gains, if not in a piercing pattern way, which means that price is most likely going to gravitate back towards this 61.33 region. So remember how I talked about price bouncing off of the 6100. Let's take a look at this actual here. Look at the low on the price, 61.13. Look at where this EMA was at, 61.02. Now look at where span 2 was, 61.46. So with this kind of confluence, it was just a really nice short-term buy signal if you had the desire to go against 4 weeks of selling. But with the still being here and the 20 EMA not really climbing much, if this were to close as a piercing pattern into this candle right here, my opinion and cloud analysis suggests price is going to gravitate back towards 61.33, further supporting that if we get that 4-hour close below the Kumo flat top that I had mentioned, that price will have a reason to gravitate here. Forex Champion has a question. What are the conditions for candle to be qualified as a rejection bar? You know, it's an important question. The challenge or the problem with that question is that there's a lot of context involved in that question, and I wouldn't be able to get into that without coming off of our subject for today. And so it would divert too much attention from today's class on Ichimoku Cloud. So maybe in the near future I will give a class on candlestick reversals, rejection bars, and everything, what qualifies that. Jack's definitely onto it at a key level, but there's a lot of moving parts in that, and there's a lot of variables along with that would make it a very long discourse and subject. So, and Jerry's saying your Ichimoku on your MT4 chart is quite different on a weekly chart compared to yours. Yeah, and that's actually, here's the thing about it. MT4, I found that their indicators are actually a little bit inaccurate on multiple indicators and multiple time frames. For example, the CCI on MT4 I find is definitely off from my CCI, which I've compared to, like, I would compare 3 charting packages together and they would all have the same CCI, and then MT4 would have a different CCI. I would do the same thing with momentum, and MT4 would have a different momentum. And the same thing goes with the Ichimoku. I've actually found that the Ichimoku, the mathematics that MT4 has put into the Ichimoku is a little bit inaccurate. And so because of that, I don't use MT4 for my charting needs. Why is that? I don't know. You'd have to consult MT4 on that. But it's obvious that the MT4 is the problem, because I can compare 3 different charting packages together. They'll all have the same reading on the Ichimoku Cloud, the CCI, and the momentum, but MT4 will be off, which to me suggests that there's only 2 possibilities. Either MT4 is totally accurate and the other 3 are wrong, or the other 3 are right and MT4 is off. And since I have 3 to 1, it suggests that MT4 is inaccurate, and I've had a lot of problems with that. That's why I don't use MT4 for my charting needs. I have a professional charting package to do that. So to me, that's the way to do it, and that's the problem with using MT4. You got to remember the code. If you were to look at all the lines of code that went into building MT4, only a small portion is dedicated towards the charts, because that's not the main function of what they're doing. The main function of what they're doing is EAs, strategy testing, using EAs, and execution. So kind of like in a house, if you dedicate most of your energy towards interior design and not necessarily to the construction of it, you may have this beautiful interior, but you may have a house that has structural problems later on. And it's the same thing with MT4. So that's why I use a company that's completely dedicated to making their charting package a success. And so Pitt Fowler has a very good question. If it's in the cloud, what does that mean? It depends on the time frame that you're using. Some time frames I find it will have very little or no meaning at all. But if you're, say, trading off a 4-hour chart and that's where you're generating your signals, or daily or weekly, if price is inside the cloud, that generally communicates a couple things. One, it generally communicates that price is at some sort of equilibrium, and that there is no real imbalance between the buyers and sellers. In fact, they still have yet to actually gain a competitive edge over each other. The second thing is that the cloud represents support and resistance. So if price is inside of that cloud, then according to that time frame, any signals that would be generated off of that would have to contend with the Kumo, because the Kumo is suggesting, hey, this is support and resistance. Okay, so hopefully that answers your question. Fat KO wants to know what were the 3 charting packages that I looked at. TradeStation, Aspen Graphics, and an FX Trek IntelliCharts, which is my main program. So hopefully that answers your question. Okay, with all that being said, I want to move on. You're welcome, Fat KO, and Pitfall, you're welcome as well. Okay, so I've done some good picking on the pound-US dollar for a second. I want to remove the Ichimoku again, and I want to visit another pair. And real quick, I just want to check on my euro pound. Oh, my euro pound is doing well. Okay, great. We just actually, Second Skies, I just sent out an alert to buy euro pound, and it's progressing nicely right now. This is good. So, okay. So, dollar CAD had a very similar formation as the pound yen. It had this little double top here at the 130 region and then began almost an identical pound yen sell-off with only one blue candle mounting a comeback. Then the pair started to get pretty aggressive on the buy side, but each candle is getting relatively smaller and smaller, suggesting that the buying is drying up. And it was drying up in the face of the upcoming opponent, which was the 20 EMA, which is a considerable opponent for any sort of rejection possible place or location. It pretty much hit it, stopped on a dime, and then closed below it. If somebody wanted a little bit additional confirmation, they could have pulled up a Fibonacci, which suggested that this thing also had additional reasons to possibly use this area as a rejection point. But what I would like to point out is that in both cases so far, the Fibonacci wasn't totally accurate, even though the closes were around the Fibonacci levels. The wicks went way beyond it. And in this case, the wick went 73 pips above it. I like to have as much accuracy in my positions as possible. And so with that being the case, if we look at it, the Ichimoku Cloud offered a really different perspective. And again, we can see how the pattern had played itself out. Came back to a 20 MA, similar fib level, and the Ichimoku Cloud flat bottom here offered a final rejection point for us, giving us another layer of qualification or assurance that this thing is probably going to reverse here, and that's exactly what happened. A lot of times, if you're looking at something and you see a possible rejection play, Fibonacci alone may not be it. So the first thing I like to throw up is a 20 EMA. If the 20 EMA is a cohort with the Fibonacci, that generally can be good enough. Sometimes I might want to consult a lower screen indicator to determine whether there's good reversal potential on that. But without even resorting to upper screen indicators, I can often pull up the Ichimoku Cloud and use the Kumo on that particular time frame as confirmation of a rejection point. And in all 3 points, the theme and the look was exactly the same, whether it's pound yen, pound dollar, or dollar CAD. The Kumo was a significant hurdle that just wasn't overcome in that case. And we see this theme again and again and again. Okay, so with that being said, I think I've picked on the pound US dollar plenty enough and shown how you can use Fibonacci's and Kumo tops or bottoms, particularly flat tops or bottoms, as rejection points. Now I'd like to move on and pick on a couple more case studies, and then I'm going to get into my hit list, which is of a good size. Hit list is 4, 5, 6, 7, 8 pairs, 6, 7, 8, and 10 possible signals on the horizon here. So got a lot of stuff to cover here, so let's move on. I'm going to do a little bit of picking on the euro-yen here, but I'm going to come down to a smaller time frame and talk about a tactic that is often overlooked. Let me zoom back just a little bit. Okay, one of the things about the Ichimoku, is anybody else not getting sound? As an Ichimoku practitioner, for those of you that have been studying this for a while, been teaching this class for first Ichimoku practitioner, you yourself want to be. And while you're answering, the last remaining bit of water for my mate. Okay, so for those who've been studying this for a while, and many of you have, because I've seen you here again and again and again, no matter what time frame you're consulting the Ichimoku, what is the first thing you do? Okay, Forest Champion saying price action relative to cloud and shape of the Kumo. Okay, technically, the first part of your answer is incorrect. It's not that it's incorrect. It's just I would reverse the order, Forest Champion. The first thing that all Ichimoku practitioners do before they do anything else is consult the Kumo. That's the first thing that you want to be addressing as an Ichimoku practitioner. And so with that being the case, the Kumo is really our main reference point that we base all of our analysis on. The shape of it, the trajectory of it, the construction of it, whether it's increasing or decreasing size, all of that is very important, and price's relationship to the cloud. But the first thing we do is we look at the Kumo, and then we look at price in relationship to it, and then from there we consult the additional two lines, the Tenkan and the Kijun line. Now, one of the things we have here is a flipping Kumo. The Kumo flips from positive to negative to positive, and positive to negative. Now, for those of you who've been coming to this class for a while, when we have a cloud that flips constantly, again and again and again, what does that communicate to us? What does that communicate to us that price is most likely going to do? Or what is the general tendency of price when we have a Kumo that is flipping from top to bottom, bottom to top? So the belly's upside down, right side up, upside down, right side up. Ranging, exactly. And the reason being is that because the support and resistance is not only thin, but it's also changing from being good resistance to being a support, then offering itself up as resistance support. And anytime resistance or support flips like that constantly, it means it's not that stable. If it's not stable, it's not relied upon. So if that's the case, then we expect a ranging market, as Forex Champion duly pointed out. If we expect a ranging market, then we want to be looking at possible range plays opportunity. Generally, an Ichimoku practitioner will look at a flipping cloud and say, okay, there isn't much information here, so we're going to wait and kind of keep an eye on other possibilities. But if that's the case, then what we want to be, does that mean we don't have an argument or a trade opportunity? No, it doesn't. What it means is that we want to look for those flipping opportunities to say, okay, this is a range environment. Maybe we should look for range plays. So far, we've had that communication play itself out. That theory has played itself out. With this pair bound off of the low 131s, coming back up to the 134.50 region, and then coming back down to the same area of support, testing it, and then bouncing again. If the trajectory continues upward and the cloud formations continue to remain ranging like this, my suspicion is, in my opinion, that this could be a pretty good area for a possible rejection point. Because the cloud is not saying, I don't have anything to offer you in terms of support or resistance being clear on one side, and if that's the case, then previous tops and bottoms are more likely to prevail than anything else. So flipping clouds aren't necessarily something that we avoid completely. We just don't look for them to give us pure Ichimoku signals. So then we can resort to price action signals as a possibility on that. So that is one of the case studies I wanted to look at. Time frames that I generally like to apply this on, 4 hours and above. If the price action gets really consistent, in other words, trending in one direction or another, then I'm open to looking at it on a 1 hour time frame. But for the most part, 4 hour charts is my favorite because 4 hour charts are kind of like the swing charts, so to say, for trading. So with that being said, I've covered euro yen. I want to look at one more thing, and I guess it's kind of picking on the pound dollar. Okay, so looking at the pound dollar here, pound dollar has had a very weak relationship to the Ichimoku Cloud as a whole. We had for a long time been above it, but then we had a very good penetration into it. And while that penetration was happening, the cloud not only flipped but got very thin, suggesting that neither upside nor downside is heavily favored. In fact, if anything, the further price is penetrating into the cloud, the weaker that structure is, the Ichimoku Cloud suggests that the weaker that structure is. So with the deep penetration in the cloud, it suggests that the pound was weakening as a whole. Then the pound decided to go on a very aggressive bull run for 7 out of 8 days. Very impressive, only to stop at this 167 region. Since then, the pound dollar has gotten incredibly bearish, dropping roughly 300 pips in 2 days when it took 8 days to climb 600. So we've almost traversed half of that in half the time. That's pretty significant. So with that being the case, this shows an overall weak structure. We can't spend much time above it. The lines are messed up. They're not in sync. We have a possible break below it on the daily chart here in a flat top, which is not surprising that it gravitated towards today. It's a generally weak structure, or it's not the most inspiring. Contrast this to the Euro-US dollar. The Euro-US dollar has a much more favorable structure in relationship to the cloud. It has had no penetrations into it. The lines are in very good harmony. Not only are they climbing in the same direction, they're in the right order, which is Tenkin, 20 EMA, and Kijun. That's the correct order. On top of it, the cloud has never flipped in this whole process. And Pit Fowler, you're saying while waiting, can I help answer your questions? Are you asking if you can help me out in answering questions? Is that what you're asking me? I just want to understand what you're saying here. While you answer that, I'm going to move forward. So with that being the case, with this kind of cloud structure continuing climbing, still good thickness, all still stable, it suggests that the euro dollar, again, which is something I've been communicating for the last 3 or 4 weeks, is far more favorable than the pound US dollar. Since it's far more favorable than the pound US dollar, that should again create an environment for euro pound longs, and that's exactly what we're getting here. In fact, euro pound is at the highs for today and continually suggests that upside will be favored on this one here. So with that being the case, with the pound continual structural weakness on the Ichimoku Cloud, I will favor euro pound longs, and I will continue to buy euro pound until those structures change. Now, Len has a question. And Pip, I didn't get the answer to your question. You were saying, while waiting, can I help answer your questions? So if you could, are you talking about helping me out? That's what I just want to find out. Len has a question. Is the Ichimoku lagging on smaller time frames below 4-hour charts? Is the Ichimoku lagging on time frames below 4-hour charts? Not necessarily. There are certain parts of the Ichimoku Cloud that can be considered lagging. The Tenkin and the Kijun can be considered lagging, but it also has a component that is not lagging, and that is the Kumo, which is ahead of price. So it's not a lagging structure, it's a predictive structure. And so below the 4-hour charts, it doesn't necessarily, the time frame actually doesn't necessarily mean anything in terms of whether it's lagging or not, because the time structure is relative to what you would be trading. So hopefully that answers your question there, Len. But it's a very good question. Okay, Jerry has a question. How do I interpret Kumo as a predictive structure? How do I interpret Kumo as a predictive structure? Well, first of all, it's ahead of price. So the fact that it's ahead is trying to communicate what, and this is a very good question, is trying to communicate what is possible future support and resistance. The other thing about the Kumo structure that I look at is the size and shape of it. The thickness of the Kumo communicates the overall, how could I say, if we look at its support and resistance, if it's really thick, then it's suggesting that there is thicker support and resistance in the future. If price is above it and the Kumo is very thick, then that means that the support is very strong. The other thing is that the thickness communicates a certain level of volatility involved in price. And then the other thing is Kumo as a predictive structure is the space or the distance price has from it. If price has a massive distance from it, then the only way you can have that is through strong push via strong volatility. So actually a lot of option traders could really benefit from learning how to trade the Ichimoku Cloud, because volatility is a key component in placing options. And so the Ichimoku Cloud offers another perspective as to how you can look at volatility. So size or depth, shall I say, or the thickness is another way to look at it. the trajectory of it, if it's climbing or falling. Is it increasing in size and shape, or is it decreasing in size and shape? Is it flipping? And the overall space and distance from it. All of those elements are looked at when looking at the Kumo as a predictive structure. If it's very thick in the future and all those things are in alignment, that generally suggests the trend should continue in one particular direction. If it's not, then that could point to possible weakness in the near future. So hopefully that answers your question there, Jared. It's an excellent, excellent question. Okay, so I've pretty much picked on the pound dollar as much as possible, and I'm going to keep communicating these euro pound long theme for a while. I will keep buying euro pound until this structure changes on both the pound dollar and the euro dollar in the daily charts, but everything suggests euro pound longs are continually supported and suggested, in my opinion. Second Skies clients, I sent them long actually earlier today with a little trade order right here, 5:24 California time, and holding on a second here. There we go. At 5:24 California time, I raised my buy entry on it. Pound dollar fell off a cliff, sending the euro pound soaring and breaking the most recent 3-month highs. We believe it's on its way to 90 pence. Hence, buy euro pound at 88.54. Here's our first target, 88.90. Here's our second target, and we're very close to hitting our first target. With that being said, looking at the euro pound and how it's behaved since then, take a look at what happened. I sent that at 5:24 California time. That was just before this candle. Market reversed, went right to a low of 88.51, and we bought at 88.54, 3 pips above the market, and now the market has bounced since then. So, just to show you, I used Ichimoku analysis to give me this buy signal. How I used it, I'm not going to communicate that. That's part of my proprietary stuff. But the bottom line is just to show you that I myself, as proof, and I don't have the charts up yet for example, but I myself as proof am continually buying it, and also how I'm communicating to my clients to keep buying euro pound. So just to show you that it's legit, that it's the real deal, and show you an example of that. Okay, so I want to start getting into the hit list. We're coming into the last quarter of this class. And so I'm going to shift to a different set of charts here. And let's go to the 4-hour Ichimoku. Abel has a question here, and the chart is coming back. Yes, that's because I haven't put the charts back up. I will in a second. There you go. Chart should be back online now. Let me know if you got them. Abel has a question, are alerts sent via SMS or email? I send them via an email unless they're small alerts, and then I send them to SMS. But right now it's mostly email, because the reason being is that most of my alerts have more than 160 characters, and email programs will not send alerts to SMS if those emails have more than 160 characters. So I'm kind of hemmed in by that 160 character limit. So with that being said, I don't send out one alert at a time, or if I do, I usually accompany it with analysis, and that causes it to go over the 160 character limit. So for right now, they are like that. But in the future, I'll be automating them in such a way that the alerts will be under the 160 character limit. Abel saying, normally there will be enough time to enter the trade, won't it? Absolutely. Very rarely do I give alerts that are very short. I mean, probably maybe 10 to 15% of my alerts are close to market entries, but usually alerts have a minimum lead time of 30 minutes to an hour. And oftentimes they have 4, 5, 6 hours lead time, because I'm picking my prices well ahead of time before they get there. So hopefully I answered your question. All right, coming on the hit list for today, this is the final segment of the show now that we're doing case studies. Euro dollar 4-hour is an attractive chart for me. We've been above the 20-minute for quite a long time. I haven't had to close below it. It keeps treating as support. In the Kijun, where there was a nice rejection off of it, came close to picking up my buy entry, but not close enough. So with that being the case, this Kijun structure, or this cloud structure, is very favorable. So what am I looking for? I'm looking for a 10 Kijun cross, first a downward cross, then an upward cross above the cloud there. And the last one is a Kiwi yen. This one's been spending a little bit more time closer to the highs. We have the nice rising cloud. We have the good separation of Tenkan Kijun. Same structure, same picture again. We get a Tenkan Kijun cross to the upside, suggests a likely attack on the recent highs. And closes above this would suggest we're starting a new leg up. So keep an eye on this one here for a Tenkan Kijun cross. Okay, that is pretty much it for my hit list. We're towards the end of the show here, so I want to wrap it up. First of all, I want to thank you all for coming. Thanks FX Street for recording this. This will be a transcript shortly in the near future, so keep an eye on that. Also, my online education class, which is releasing a lot of strategies that I haven't released before and unpublished statistics, is going to be finished today and published tomorrow on my website. So keep an eye on that. Anybody that's interested in that, mention you're an FX Street client. For being an FX Street client, you'll get a $50 discount on it. Any questions about our services, visit us, www.secondskiesforex.com. You can also email me directly, info@tunedskies.com. I love hearing from you. And for those of you that made it to the show, thanks for coming. Omeda, CM, Jocelyn, Jeff, Management, Apex, PGT, PG, Harry, Elena, Stoyan, Jasper, Nestor, Obvious, Tom D. Wolf, good to see you. Jack, Ruth, Sylvester from Australia, good to have you here. Forex Champion, Zul, FS Rahul, Mirko, Burton, Carleb, FX Newbie, Abel, Query, Greenland, Inya, Wen, good to see you from San Francisco. Nick, Damien, Cat, LP, thank you all very much for coming. Good having you here. Until then, good Ichimoku hunting, good trading, and I will see you next week. Take care, everyone.